Hello and welcome. Thanks for staying tuned with NDTV Profit. I'm Harsh Saita. This is, of course, we're focusing in on earnings heavy week. And we also have the likes of a Union Bank of India coming out with numbers. We have Mr. Nitesh Ranjan with us, who's the ED at Union Bank of India. First off, welcome and good morning, sir.
Good morning.
Right. Sir, just talk to us about the set overall for Q1 FY25. It's a very strong set of numbers you've put out, but you're seeing a little bit of contraction on margins, of course, above what you've guided for, so no doubts there. All credit to Union Bank. But talk to us about how the quarter has gone by and what you believe are the key clinks in the armor.
Yeah, thank you. So for the first quarter of the current financial year, Union Bank has posted a very good set of profit and business numbers. And as you rightly said, all these numbers have been in line with the guidance that we have given for the current financial year. We'll also acknowledge that generally the Q1 remains a muted quarter. There is subdued growth in all financials we have seen, and this financial year has not been any different. Despite that, we have met all the guidance. Also, the few of the things like cost to income ratio, we have been able to bring it to the normal level. ROE remains intact in line with the guidance. And even the net interest margin, while we have given a guidance of maintaining during the current year in the range of 2.8 to 3%, we have been able to post an NIM of more than 3%. And that has been an outcome of a effort to ensure that we are growing our top line without compromising the bottom line.
Got it. So, just in terms of the way the numbers have shaped up, when I'm talking about margins, it's a tough deposit growth environment. You've done a decentish deposit growth just in terms of the year-on-year number. Sequentially, of course, absolutely flat. And your margin number has stayed above the 3% mark. Are you reasonably confident of clocking 3% plus? I know you've guided for 2.8 to 3, but do you believe that there could be a possibility of a 3% plus margin all through the year now that we're seeing a little bit of a peaking in terms of the deposit pressure on the system?
Yes, if you look at Union Bank of India particularly, our deposit growth rate has been a little lower than the advances growth rate. But it has to be seen in sync with our credit deposit ratio, which in the domestic market remains very benign at around 73%. And as I said, that we would like to ensure that there is a good trade-off between the top line and the bottom line. And that's how we are maintaining. But in the market, definitely on the liability side, there is a huge pressure on the deposits. Still, the repricing is happening, and we are seeing that different lenders are kind of increasing the rates on deposits. So that pressure is going to remain. Also that the deposit repricing started somewhere during the second half of the previous financial year. Therefore, the full impact is likely to come during the current year. And along with that, the around 42% of the loan book, which is external benchmark linked, that remains stable because of the RBI policy stability. And there is only some possibility of MCLR repricing. And given that there is definitely a pressure on NIM, we have given a range of 2.8 to 3. We'll definitely try to maintain this towards the higher range of the guidance that we have given.
Okay. Sir, just with regard to growth, where will a bulk of your growth come from? And do you expect the corporate cycle to start to pick up? Because that will really spur growth for you. Are you seeing some traction there?
Yeah, definitely. So the major part of our growth is from the RAM segment, retail, agriculture, and MSME. And you would notice quarter after quarter that this segment we have been able to grow in the range of 14 to 15% YOY on a consistent basis. We have taken multiple initiatives to ensure that the RAM segment growth remains at a higher level. Also, the corporate segment, we are seeing some kind of increase in the takeoff, particularly in the road sector, power sector, including the renewables. Food processing is yet another area, along with chemicals and some of the new sectors like data center, logistics. We are saying there is a good demand, but yes, still it is far from what the capex cycle we are expecting. So on a mix of it, we'll have a good growth from the RAM segment, also supported by the corporate.
Understood. And when do you believe, sir, would capex start to kick through in terms of the corporate capex cycle for the banking system as a whole?
Yeah, we're just waiting for it to happen, and there can't be a better time than this when both the balance sheets are quite strong. Hopefully, the budget will focus on both the consumption as well as the investment demand, and that will be able to drive the capex cycle.
Okay. Sir, let me switch focus to asset quality. Your slippages have contracted substantially when I'm looking at it QOQ, YOY. Talk us through what are the factors which are contributing to this improved performance where slippages are concerned.
Yeah, so I think Q4 last year was a kind of one-off where we saw some higher slippages in segments like agriculture and MSME. Otherwise, if you look at our numbers for the last 4 or 5 quarters, we have been able to contain the slippages, and this is an outcome of our efforts in terms of the monitoring and collection of the accounts of all the segments using different methodologies for that. And that is the reason that Q1 this year we have seen our slippages, we have been able to contain at around 2,300 crore. Last year, if you look at full year, the delinquency ratio was 1.6%. For the current fiscal, we have guided for it being less than 1.5%. But in Q1, we have been able to contain it around 1.1%.
Right. And sir, do you believe that this is sustainable?
Yes, given the book that we have and the continuous monitoring and the feedback that we have from the ground level, I think our guidance of delinquency, we are hopeful that we'll be able to maintain well within that level.
Understood. So ROAs are inching upwards. It's still not, it's peaked virtually. I mean, in the sense we are at a multi-quarter peak. 1.07 is the top that we've seen in the last 8 to 10 quarters. Where do we go from here, given the positive tailwind you have with regard to both growth as well as contained and controlled slippages?
Yeah, so ROA for the last few quarters have been above 1%, except Q4 last year where there was a one-off. But I think we have reached that trend level of 1%. We'll be able to maintain that. There are a few factors, particularly like pressure on the NIM that we are seeing today. If that sustains towards the lower level, that will have some pressure on ROA. Otherwise, we should be able to maintain ROA not only above 1%, but maybe going forward, maybe 4 to 6 quarters from here, it could have an upside potential.
Understood. So would you say 20 bips from here?
Can't guide for it right now, but yes, it would have upside potential.
Understood. And this is despite the fact that there could be an RBI rate cut at some time, second half this year. At least that's what a lot of analysts are penciling in.
Yes, yes.
Okay. So I just want to touch upon recoveries because that could be the positive catalyst on ROAs. 16,000 crore worth of recoveries expected in FY25 full year. Do you continue to maintain that, and do you believe that that's a reasonable number? Could there possibly be scope for upside on the recovery number?
Yeah, definitely. If you look at our performance of Union Bank of India during FY23 and FY24, particularly on the recovery, it has been quite good. We had actually surpassed our own guidance for both the years. Last year, we did a recovery of over 18,500 crores. This year, we have given a guidance of 16,000 crores. Q1, we have already done close to 3,400 crore, despite Q1 generally being a muted quarter. And given the pool that we have, we have around 80,000 crores of written off accounts. We have 41,000 crores of gross NPA. Around 51,000 crores of loans are in NCLT in different phases. So it's very much possible that we'll be able to meet and hopefully surpass the 16,000 crores guidance for recovery.
Okay, and how does that impact your ROA therefore? Would you therefore guide for 1.1%
16,000
plus?
crore of recovery, 16,000 crore of recovery is already factored in our ROA guidance or above 1%.
Understood. Okay. Thank you so much, Mr. Ranjan. It's been a pleasure speaking with you and breaking this down.
Thank you.
Well, out of time, Union Bank, of course, in focus on the back of numbers, but stay tuned to NDTV Profit, more action on the other side.